Welcome everyone to another market closing live stream. Oh my goodness, the stock market is taking off, and folks kind of expected this because remember what our catalysts of fear were 3 weeks ago, maybe 2.5 weeks ago. Evergrande fears, debt ceiling fears, government shutdown fears, infrastructure fears, interest rate fears, tapering fears. Okay, let's walk this back. We've already talked about tapering. We have our time frame for tapering. That's over. I'm not going to get this order right, but the interest rate fears have ironically been very, very stable. The bond market has been incredibly stable over the last couple weeks here. It's been incredible. Evergrande fears fizzled away. Budget got extended, didn't shut the government down. Debt ceiling crisis now delayed through November. Infrastructure, now we got time to negotiate it through November. Literally all of the fear catalysts are going poof. And this is what I'm talking about, is we want to invest in fear. When people are freaking out, going, that's it, this is the beginning of the end, you got to ask, what's the catalyst? Somebody please tell me why I should be more fearful now than I was on March 19th before the bottom of the market on March 23rd of 2020. Tell me, please. Why should we be more fearful now than we were then? We shouldn't be. We should be cheering the fact that companies are substantially more efficient, substantially more capitalized, have a more productive workforce, are investing more in productivity, better machinery, preventing supply chain issues in the future. We are creating a mega strong economy. Now, look, we're still going to have headwinds, commodity price inflation, commodity indices at record highs, people talking about the potential next commodity super cycle. Is that what we're going to run into now, or is what we're seeing temporary, supply chain disruptions leading to commodity prices skyrocketing? I don't know. That's to be determined. But in terms of our favorite companies, you have to, in my opinion, you buy and hold these suckers. Take a look at the market today and what we've got. So first things first, we'll start at the top here. Look at a firm. Oh my gosh, it's even up more than I thought it was going to be. This has been one of my biggest plays as of late. And this is a company that, as of my last check, I have in a firm. It says here, a firm is about 6% of my strictly share portfolio, almost the full 10,000 shares. Just need about 100-ish, 190-ish more shares to get to 10,000 shares. So good chunk of change in a firm, and it's up 23% today on news of a Target partnership, which they've already been partnered online with Target, but really this is excitement about the partnership with Layaway, and I'll do a more detailed breakdown on this and really the implications for this. But a firm is one you don't want to sleep on, in my opinion. Now, I don't know that I would necessarily try to run in and buy it right now. I don't like buying things when they've skyrocketed. I like buying things when they're in pain. And that's why I last bought a firm just a few days ago at $109. Or I may have sold puts. I don't remember exactly what I did. It doesn't really matter either. But the point is, I like investing in pain. That's also why I bought Owlet, which is up 6% today. It's also why I bought Enphase as much as possible here in the 140s and also in the low 150s, which is where we are now, but we're up 4% today. Coinbase back to about 250. Been buying DocuSign. I'm about 3.37 here. We've got a lot of wins here so far today. It's really incredible. EXPI, Etsy, these folks rotating back. Lemonade slowly coming up with a 2% gain. Some of the higher quality companies nicely moving. Palantir getting burned a little bit. Palantir, let me see, what's my percent? I should do a full breakdown. Palantir is 0.8? Yeah, 0.8% in my portfolio right now. But anyway, so okay, let's look at the downside here. Camber Energy. All right, so I made a video about this yesterday about why this thing was dropping. It dropped 50% yesterday. It's now down another 39%. The momentum is gone. the short seller just accelerated, I feel like, what was going to be a natural sell-off process anyway. So good for you, Parson Enphase. I'm glad you're up on Enphase. Why didn't I buy more Firm? Was probably because you don't have the alerts for the Stocks and Psychology of Money program, where you would have seen me buy on a Firm and gotten those push notifications to your phone. In case you want those, make sure to use that 41% off coupon code link down below on Stocks and Psychology of Money. Remember, it's very popular for people to be bundling up with the other programs like the Real Estate Investing Group. So, okay, let's see here. Just closed on a deal, by the way, on Friday. And I had 3 properties in escrow, but one of them turned out not to be something I wanted to buy. So I'm only at 2 properties in escrow right now. Although I do have a message out to another agent right now because I want to write another offer. All right, additionally, let's see what's moving down here. Bed Bath, some recovery things really moving down here. But then again, you've also got beach. A lot of the more on the speculative side of things, companies selling off. I'm just going to read off the speculative ones here. In my opinion, Camber, Ater, Ethereum, whatever, Workhorse, Voyager Digital as a Canadian stock with financials that are a little bit harder to review because they're not listed in the on the SEC, at least that you can easily find. They're down, gosh, 9%. Geez, on a day crypto's up too. It's interesting. You've got Seagate Technology. That one's not really speculative. You have Metamaterial down 5.5. Beachbody has kind of become speculative as well. It's more like a SPAC that's getting punished. Metamaterial. I feel like Beachbody really must have just ran on valuation for its old P90 reputation, but P90X, but just never really caught on to mainstream again now. Bed Bath, American Airlines. So we got some recovery movers down. Some of the EVs moving down, like Canoe. Interesting. Hut 8 Mining is actually down. Dutch Bros on the recovery side down. Tattooed Chef down. Spirit Airlines down. Arcimoto down. I had covered calls on this and took some big tendies on covered calls. That was great. DQ, Delta. I do want to know why some of the solars are lagging. The mortgage companies are just getting absolutely obliterated, and they have been getting obliterated for a while. It's really incredible. Like some of these smaller companies, just absolute destruction. Okay, then we have, let's see here. Planet. Okay, yeah, cannabis stay away from right now. Win 84. Hippo 444. Trying to see here. AMC's trying to recover here into the close. Matterport. Where's the darn thing? Keeps bouncing around. Neo at 33.67, I think, is still a good deal. Matterport 18 is an okay deal. Really like Matterport long term. Tesla's actually down into the close here a little bit, 0.21. Says Robinhood. But seems like I want to know. I'm going to run a poll here really quick. Let's do this, okay? Let's run this poll. Everybody can vote in it. Do you like Robinhood? That's literally the question. Do you like Robinhood? Yes? No. Okay. Curious. Okay. So, Cloudflare up again nicely today. 5.78%. Enphase at that 3.83. Good. Okay, then we're back to these greens over here. Very nice. Very, very nice. Good. So, yeah, the Palantir bleed out I find very interesting here. Palantir only sitting at 1.4% up. Yesterday it was up like 13% in the after hours. It was incredibly euphoric. But anyway, speaking of euphoric, look at Affirm, folks. This is something we can cheer. Just dollar hollers right here. Woo! Very, very good. Okay, so now let's go ahead and see if we can get. Oh, and then of course we got Sheeb over here, and kind of track the Sheeb train. Wow. Here's the 6th. Kind of flat intraday, but did run up there towards the turn of the day here. Fascinating. Okay, good. So next up, let's go ahead and hit some news. Oh, Smile Direct finally recovering a little bit too. This one's just been in the toilet. Anyway, okay, so let's hop on over to some of the news and see what we got going on in the news space. All right. So first things first, let's look at the indices here. Dow Jones mostly flat, S&P mostly flat, NASDAQ mostly flat, and Russell 2000 down 0.73. Dow Jones 0.03, S&P 0.09, 0.11 now, and 0.12 at the NAS. Let's go to Bloom. Sheep might be running Bitcoin. Yeah? Hey. Wow. Okay, I'm looking at the votes now. Let me see how many people have voted. Just over 1,300 of you have voted. Okay. A little bit less unified than I expected, but that's interesting. We'll come back to this. If you have not voted in the poll yet, whether you like or do not like Robinhood, please vote. All right. So, Biden. So I made a video about this McConnell thing. This is a great way to lift anxieties. Let's see what this is. Biden enlists Diamond and Frazier. Diamond, like Jamie Dimon? Joe Biden enlisted financial and corporate leaders to help him pressure Republicans to stop efforts to suspend the U.S. debt ceiling, warning the government faces the first ever default that would tank the economy. Biden hosted a virtual meeting at the White House with several CEOs, whom he had asked to explain how a default would impact their business. We're going to be defaulting on a debt that would lead to self-inflicted wounds that would risk the market tanking and wiping out retirement savings. CEOs scheduled to attend include Citigroup, Bank of America, Brian Moynihan, JP Morgan's Jamie Dimon. Wow. President and CEO of the NASDAQ. Wow. Raytheon, Deloitte. Oh, we got a lot of people going. See, this is the kind of Zoom call I want to be on. Like, that's cool. You think they'd let me on with my, with my beautiful druid shirt here? A tree druid. See, it says druid somewhere down here. I can't see it, whatever. Defaulting is going to cost lasting damage. Yeah, well, it looks like his whatever his strategies have worked, because he's gotten Mitch McConnell to fold, which is excellent. Could also be just a complete control play by McConnell. That's certainly how he's branding it. But anyway, it's great. It's very, very good. Okay, many firms are underinvesting in China. Yeah, I believe that. All right, let's see here. What is this? Okay. Oh, this should be juicy. Y'all ready for this one? Let's go talk about Morgan Stanley's Mike Wilson warns of fresh stock market pain. We just started this video off talking about how so much pain has been evaporating in the market, as we have predicted. We predicted that pain about the taper would go away. We now have a taper course. We predicted that pain about the infrastructure package would go away. We now have more time. We predicted the debt ceiling pain would go away. We now have until the end of November. We predicted that the government would not shut down, or if it did, it would be brief and it would end up getting resolved. The government did not shut down and went away. All these are fear catalysts that went away. Also predicted that the Evergrande crisis would not be a lasting crisis, and thus far it has not been. Therefore, so far, we've been doing pretty well with the predictions that the fear we have in this market would evaporate. We've also got the jobs and inflation data coming out, which so far jobs data looks like it's going to show a very robust economy based on today's private employment report, which beat estimates. So, which also makes sense because we have the unemployment boost expire. We have Delta fears evaporating. So really good things happening in the market. But with that said, we do have some FUD, fear, uncertainty, and doubt, not to be confused with misinformation or disinformation. Or, well, then again, we haven't read it yet. So let's see. A little more than 2 weeks ago, Morgan Stanley's Mike Wilson warned of a 20% plunge in U.S. stocks being a real possibility. Since then, the S&P 500 has weathered bouts of volatility to remain near all-time highs. Now, skeptics like Wilson find a more repetitive audience as the bond sell-off gathers pace and stocks fall in Wednesday trading on growing supply-side crises around the world. It's all emboldening the strategist in his view that earnings season will do little to temper the commodity-fueled inflation fears, just as pent-up consumer demand fizzles out. We're in the final phase of this mid-cycle transition. Ooh, that always sounds scary. Like we're in the final phase of this mid-cycle transition where growth is decelerating and the market corrects. Ooh, he said in a telephone interview. While the S&P 500's multiples had already slipped to 20 times its coming year earnings, the analyst sees further declines to 18 as the near-term earnings. Combine that with the likelihood that corporate profits fall from here, and it's hard to justify stock prices at near record levels. Ooh. Anytime you get multiple compression, you reduce stock prices, and inflation can create that sort of multiple compression. We've been calling for this 10 to 20% correction that would be led by tech stocks. We think earnings estimates are too high. U.S. stocks fell early Wednesday. Woo! And European benchmarks fell about 2% when the Treasury sell-off extended for a third day. The S&P, well, it's been relatively flat right now, but okay. S&P has defied numerous warnings to double from its COVID trough, but investors are now grappling with inflationary concerns that have been unseen over much of the last year. Meanwhile, one gauge of consumer prices is rising faster in 3 decades to send benchmark Treasury yields to 3-month highs. That's bad news. Okay. Wonder what that benchmark is. At the same time, retail investors have become increasingly absent as dip buyers. The retail community has been very resilient, but eventually, if they want to buy the dip and it doesn't work, they don't buy the next dip. That's what happened a few weeks ago when the S&P pulled back below the 50-day moving average, right? The team recommends, here we go, recommendations. The team recommends value stocks, traditional, cheap, cyclical names like banks and energy producers that tend to gain along with bond yields. I mean, it's interesting that you would pick energy producers at this point. I mean, that assumes that this energy crisis would continue and that you'd want to hedge, which is possible. But if you end up having a resurgence, or not a resurgence, if you end up having sort of a correction back down in commodity pricings, I don't know how exciting that would be. We believe final demand will stay firm as both corporate and the consumer are in good shape. I don't know. Kind of mixed messaging in this one. It was it started out strong, but not so exciting. Yeah, why Hut 8 is down, I think, is a very interesting one. I don't have an answer to that. I may try the term here really quick. Let's see if I can log in. In the meantime, let's look at the S&P 500. Woo! Let's see if we get a sell-off into the close. Nope. If anything, right now it looks like we're kind of going on rally into the close on the S&P 500. But we will look into Hut 8 to see what the scoop here is. Okay, DVMB. Does that stand for anything? DVMB? I typed it in the wrong place. I don't think so. It almost looks like dumb. It was one letter away from the word dumb. So, and then it's like, oh, are they calling the article dumb or you dumb? Oh, man, superstitions. All right. Let's keep going here. So, how are we doing? Well, we've got an acceleration in Smile Direct. Cloudflare's up 5.97. Upwork is running a little bit, 5.17, running a little bit into the close. So is Monday.com. A lot of these work from home stocks doing very, very well right now. Camber is getting obliterated. Gosh, anybody who bought the dip on that this morning is down like another 30% right now. It's crazy. Ugh. That's why you gotta be careful. Buy the dip is not a good idea on momentum, because when you have a dip in momentum, the dip just keeps dipping. One letter away from dump. Oh yeah, actually, was it a P? Now I can't remember if it was a P or B. But anyway, yeah. All right. So let's listen to CNBC here for a moment.
Saying that their rivals don't do as much as they do in this matter. The CEO also defending Facebook's work on Instagram for kids, saying that tech companies should build safe experience for the young people that are inevitably and already using technology. Guys?
Julia Borston. Julia, thank you. Josh, I feel like with this whistleblower testimony, you watch it as a parent, you watch it as a citizen, as someone who believes in democracy, and then as a shareholder. Are they different right now, or do you think this is starting to really have a psychological impact on investors?
Yeah, I made this point on halftime yesterday, and I'll repeat it. Like there have been worse moments for Facebook in the last 10 years or almost 9 years since they've come public. There have been worse PR crises than this.
Yeah, that's true. But we're gonna go ahead and back off this. So, golly, would I do any dip buying beyond the moves that I have made that I've sent? What is there to dip buy? How Corsair's doing? Gosh, just keeps going down and down and down. Yeah, it's just a slow bleed. Zoom as well, I think. 253. Oh, yeah. Look at these trends, folks. These are horrible. Oops. Yeah. Okay, it's somewhat slowed. Yeah, that's not such a good line. Better off trying to do something like this. That's much better. Makes you wonder if it could break out of this. There we go. Definitely got yourself a wedge. Now it looks like a dragon head. Doesn't that? And like the moving averages there, the little red is creating like the eyeball. Looks like a dragon. We created a dragon in Zoom. I wonder if that means it's going to fly up or is it going to fireball? Yeah, fireball. See, this is the kind of quality TA you could also learn in Stocks and Psychology of Money. Drawing dragons and talking about fireballs. You're missing out if you haven't used that coupon code. And you're missing out if you haven't gotten your $70 in free stocks or up to $70 in free stocks with Public. Go to metkevin.com/public and get yourself up to $70 in totally free stocks. They don't buy or sell your information, and they don't use payment for order flow. What's the breaking news, CNBC? What is it? Give me something good.
Sarah, the U.S. and China have reached an agreement in principle for the two presidents to have a virtual meeting before the end of the year. The details on when and how long are still being worked out, according to a senior U.S. official who confirmed the news originally reported by Bloomberg. The meeting was brokered by National Security Advisor Jake Sullivan, who met in Zurich this week with his Chinese counterpart. And there have been some complications around scheduling because President Xi was not planning and still is not planning to travel in person to any of the multilateral events happening this fall, the G20, COP26, and others that are happening later in the year for various reasons, because of the COVID-19 pandemic, and also because there's just a feeling within China that he doesn't need to go outside the country and that there are no deliverables that he needs to bring to the table at this time. So that had complicated some of the planning around whether there was a multilateral event that the two leaders could just have a bilateral meeting on this side. And so that is one of the reasons, according to my sources, why this meeting has become a virtual event, simply because President Xi is not planning to travel outside of China this fall. But again, an agreement in principle for the two leaders to have that virtual bilateral meeting before the end of this year. Wilf and Sarah.
Kayla, thanks so much for that. We've got 5 minutes left and are gaining. We're at session highs, up 80 points.
Do we care that they're going to have a meeting? I honestly, I don't know. I really don't know. Wait a second here. What is this? This is just the paper hand society that we're in, isn't it? Hold on a second here. What happened on the 4th? The 4th was Monday, okay? The 4th was Monday. So let's see here. What did we do on Monday? SPY? Were we red Monday or green Monday? I don't remember. Okay, so this is the day chart. 5-4. Was it a red day Monday? Let's see here. So this would be Tuesday. This would be Monday. Oh, it was definitely a red day. That's interesting. That's actually fascinating. Never mind the comment about paper handy here. We had paper handing last week like crazy. Ark Invest had a big outflow. They had a day that they were almost down $297 million on the 28th. That's crazy. But anyway, on the 4th, they had a $268 million inflow right here on the 4th. That was a dip day, folks. The 4th was a dip day. Let me see how much of a dip day it was. The 4th was, barely. It dipped 0.38%, the S&P 500. So it was barely a dip day. Wait a minute. That was the day after Tesla deliveries. Of course. So people flew into Tesla stock. Into ARK Invest on Monday because of probably those Tesla deliveries. Wow. Simple. And then the S&P was up 0.33% yesterday, and about another $109 million flew into Kathy's fund. We'll see how outflows end up looking today. But then again, today's going to end up green. And that also reminds me, if the institutions going to be buying here close to the end of the day? And right now it looks like it. Market goes green. You get the institutions and the funds. They start going shopping because they can't help themselves. They get all those extra inflows. Lots of green. Even Robinhood went green. And we just did a poll here on the channel. And it looks like out of 4,480 votes, 58% are against Robinhood or do not like Robinhood. Wow. All right. And let's see here. Microvest, Seagate. Let's see. I want to see how things are moving as we go into the close. So let's take a look at Tesla. Thanks. Oh, look at Tesla kind of moving up nicely here into the close, about up 0.5% or 0.25%. Certainly better than the fall that we had earlier. Matterport is finally U-turning, going from 1763 on the low today to 1830 here. Affirm down a little bit to 1915. Looks like the traders are peeling out of Affirm as we get into the close of the day, potentially moving over to Smile Direct here, or just waiting to see what happens tomorrow. Outlet up 5%. Let's see here. No, it's still pretty low. I want to see Outlet get back to like 5 or 6. Let me see my call options. I think I have some calls on it. I moved my shares to calls. I'm trying to remember where they are. I have no idea where they are. Oh, they must be in Webull. Yeah, that's it. Outlet calls. Outlet. Oh, yeah, okay. Outlet March 18th call for 250. That's my position. Okay, good. So Bitcoin just over 55,000. Strong day today, honestly. Let's hit that bell. Let's see. Look at that. The indices nicely green, especially after that debt talk.
Defensive tilt to what is leading, but nonetheless, a great intraday performance means that at the close, we're up 0.5% on the NASDAQ, 0.45%.
Congratulations. That is the close. The Russell 2000 is down about 0.56%. The NASDAQ is up 0.47%. S&P up 0.41 and Dow up 0.3. That's pretty incredible given the disaster that we had yesterday.
Welcome back to Closing Bell, everyone. I'm Sarah Eisen here with Wilfred Frost and Mike Santoli, as always, CNBC Senior Markets Commentator. Take a look at how we finished up the day on Wall Street.
We just did. All right. So it does look like there was a tiny little boost there right into the close there on Affirm. Up, looks like about 20% on the day. Really cool. Definitely like that, especially since it's a nice big old position. We've got Cloudflare at 6% up here today. Very good food company, continues to move here. We have Outlet almost up 5%. Enphase just over 4%. Upstart's coming back 4.7. EXPI 3.4. Etsy's back up almost over 210 again on Etsy. SoFi 2.25%. Good job. Lemonade 1.73. Slower growth. Really the big losers here. Certain SPACs and momentum stocks getting burned. Like Faraday Futures down 6.59%. Moderna down 8.94% on still news of this Merck pill. You've got Workhorse, Ater, and Camber just getting smoked today. Beachbody's getting smoked as well. Let's go to Merck. Merck actually down about 0.05. I'm sorry, that's in the after hours. Let's see how Merck did during the day. Merck. That is, where are you? There it is, Merck. Merck was actually down 1.12% today and down fractionally here in the after hours. Let's see what other news we have. Okay. Ginkgo Bioworks. Yeah, I heard that thing got like short reported. I don't know anything about it. Ginkgo stock. It's something like this. Pretty sure Kathy would invest in it too. There we go. Ginkgo stock. Oh yeah, down 11% today. Well, it was down more. So almost down 15% at one point. Okay. So we talked about McConnell, talked about the debt limit, good catalyst removal. Awesome. All right. Amazon Twitch hack shows top gamers rake in 6-figure payouts. Okay. All right. Nothing really exciting here. Kathy Wood has been projecting this for a while that she would leave New York and end up going to Florida. So that's not a surprise. It's also going to help them income taxes. That's cool. She's going to Florida. I wonder where in Florida. It's got to be Miami. Come on, financial Miami or Tampa. Let's see. South Florida. Okay, that's St. Petersburg. Wow. At the end of October. Ooh, really? Yeah, right outside of Tampa, folks. Look at that. That's a hot area. Do you really consider that South Florida? I mean, this is Central Florida, in my opinion. I don't think St. Petersburg is South Florida. I don't think it sounds hot to say South Florida. But, South Florida, Sunshine City, boating. Yeah, it sounds awesome. But is it considered South Florida? Like South Florida versus, I don't know why we're looking at this, but I'm going to do it anyway. South Florida versus Central Florida. See, here it is. Oh, that bay and this bay. Okay, well, which one's which? Now I gotta know. I have to. No, I think I'm right. See, Fort Myers and Port Charlotte over here, they're the cutoff of South Florida. See? Oh, wait. But right here at the tip is technically still South Florida. St. Petersburg. No, that would be here. So this key over, or this peninsula over here. I'm right. It's Central Florida. It's Central Florida. Get out of town, Bloomberg. But they didn't say South Florida. I'm the idiot. I misread it. It says shift south to Florida. Dang it, Kevin. You screwed up. Oh, man. All right, whatever. Like, who doesn't know that Florida is to the south of New York? Whatever. All right. So Smile Direct dropping about 2% here in the after hours, but you get a little bit of this early after hours volatility. So not a surprise to see a little bit of volatility here in the early after hours. No big movers. BNGO Camber trying to recover a little bit here. Bitcoin's been sitting mostly flat on the day. So is Dogecoin and Ethereum, with the exception of its early morning pop. Cardano's done roughly the same thing, sitting at about 223 right now. Then let's see here. Anyone catch a firm? Yeah, buddy, we caught a firm. A firm was hot today. It was great. Part of me is like, I gotta sell calls, but I didn't. I think there's too much of a risk in that right now. One sec. Okay. So all right, let's look at some other news. Let's try like Financial Times or something like that. Okay, let's try the FT. Let's see what we got over here. Financial Times. Ooh, really? This is interesting. U.S. is considering releasing emergency oil reserves to tame the fuel price surge. Ooh, well, that would be a populist move from Joe Biden's administration. Reduce those gas prices. But interesting. Yeah, this is really because we have a strategic oil reserve, and we have the potential for a lot of capacity, but we really haven't seen capacity bump in the last 2 years. If anything, it's declined in terms of production capacity. We have half of the oil producing rigs that we had in 2019 active right now. It's kind of crazy. All right, this S&P reversal, by the way, today, the intraday reversal was the biggest intraday reversal we have had since February. Wow. Incredible. Okay. U.S. Energy Secretary Jennifer Granholm has raised the prospect of releasing that crude oil from the government's strategic petrol reserve, declaring that all tools are on the table as the Biden administration confronts a politically perilous surge in the price of gasoline, with the average price of petrol at the pump hovering around $3.19 a gallon, highest in 7 years. The White House fears that a rise in fuel costs could damage its political prospects ahead of midterm elections next year. That's a good point. That's a very good point. All right, let's see here. Strategic Petrol Reserve, located near the Gulf of Mexico, is the world's largest emergency stockpile of crude. 617.8 million barrels of oil last week, equal to about 1 month of U.S. petrol products demand. Well, you don't need to replace all of it either, because even if you just trickled out an extra 10%, or even 8% or whatever a month, that would be like it would last you a year. You'd be able to trickle it out for about a year. And you should be able to bring gas prices down by just trickling some of it out. Because remember, you don't have to replace all of the demand supply. You just have to replace some or add to some of it. Price of crude at $77.60, hovering at the highest level since 2014. And we talked about OPEC Plus already on my inflation video. Lots of drama in commodities and oil, though. Okay. All right, let's see what else we got. Talked about McConnell, Biden, Kathy moving. Oh, it's top of Financial Times as well. Kathy's moving to Florida. Man, I'm jealous. I'm so jelly. I want to move to Florida. Will American drivers go electric? Yes. GM aims to double sales by 2030 with boost from electric vehicles. Good luck. Traders phone up gambling helplines as game-like broker apps spread. Traders phone up gambling helplines. Really? Any of you ever call one of these gambling helplines? Helplines of gambling addiction recovery groups have been ringing with a new kind of caller, day traders. The rise of mobile brokerage applications outfitted with prompts, animations, rewards, digital flourishes have brought the feel of investing platforms closer to online sports betting and gambling. The user experience is converging, and the line between gambling and investing, which is already pretty fluid, has almost been completely erased. Wait, you mean YOLO calls on Camber aren't investing? US SEC is now examining the extent which they have digital engagement practices, including gamification, blah, 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 blah. Okay, slot machine style graphics, leaderboards, whatever. Addiction by design. Okay. All right. Sorry. Not interested. Inside the battle to be Europe's Robin Hood. Who's trying to be Europe's Robin Hood? Let's see. Robin Hood's decision last summer to abandon its UK launch fired the starting gun for a race to fill the gap. Free trade. Trade Republic. Lots of different apps. I can only imagine the amount of apps that are out there. Oh, that's bad. Oh, what a bad pun. Hold on. It's actually interesting though. Stonks call suicide hotlines and they get put on hold. Oh. Ouch. Oh gosh. That's bad. You get put on hodl. Oh no. Hey man, just hodl. Oh, that's so bad. No. All right. I'm gonna remove that little banner here. Thank you for the October 15th affirm call. I was able to get out with 150% profit. I almost bailed Friday and yesterday with a 30% loss. Thank you so much. Oh my gosh. Yeah, well, you had a call for next Friday into today. That's a good for you. Woo! You had some diamond hands there holding on like that. And I am happy you took profits. Take freaking profits, okay? I had some sold puts on firm, and I took some tendies today, okay? It was $29,000 of tendies, and some of them were up like 90%, and I'm like, yes. I'm like, cha-ching. So, yeah, congratulations on a firm, folks. So, yeah, do not feel guilty taking profits on your options. Take profits on options. Options can just like that go fat negative, and then you're a bag-holding weenie baby forever, wondering when you should paper hand your losing bags. Sorry, is that too blunt? I don't know, probably. I think this was Fantasia, right? Yeah, this was Fantasia. I like the picture here. That's interesting. I wonder if the workers really do wear hard hats like this. That's kind of cool. Covers you up from the sun. Literally cool. Anyway. All right. Do we have anything else going on? Anything? Let's see here. Go to Bloomberg. Bloomberger. Okay. Let's see. ECB is said to study new bond buying plan for when crisis tool ends. Okay. Debt ceiling anxiety tracker. Oh, that's a good one. Take a look at that. Ooh, what is this? So, meanwhile, investors in need of alternatives to certain T-bills are flocking to the reverse repos, adding to demand created by T-bill supply. Okay, reverse repos still kicking butt. Protection against default, small buffer. I'm trying to find. Let's see. Treasury's cash balance is down to $100 billion. Yep, that's why we got a debt ceiling crisis. Treasury bills. This okay. No, these are just different graphs. This isn't too interesting. All right, let's look at what the 10-year Treasury did, though. Do that over here. All right, what we got over here? 10-year Treasury. 10-year Treasury ended at 1.526. Pretty stable. You didn't really get a sell down on the debt ceiling news today. I don't know. I'm going to probably release a video here on Shibu Inu and Rivian soon. But yeah, beyond that, I don't know. I think that about covers it. So I'm kind of excited about that. It's a good stock market day. Very good. Let's take a look just to see if there's anything crazy going on in the after hours here. In the meantime, make sure to get your up to $70 in free stocks by going to mykevin.com/public and check out the programs down below on building your wealth every time I buy or sell, whether it's crypto, stocks, options, sell options, buy options, puts, calls. I don't care what it is. I post those alerts most of the time with screenshots. Sometimes when I'm rushing and I do it like live or something like that, whether it's in the course member live or what. I don't throw up a screenshot because it's recorded live. But anyway, so a firm hold. Oh, look at a firm 135 in after hours now. How high did we actually run today? Because it was up like 123% or 23% from what 138.88 all time high today. 9,000. All right, let's see. I can quickly look at some short interest, although you gotta be careful, folks. The whole like short interest thing has kind of evaporated. I'm telling you, it's hold on a second. Short interest. Ah, there we go. Run app. Okay. All right, let's see what we got. All right. Yeah, Ryan, that's a good one. I agree on the valuation there, Sheeb. Okay, so somebody wanted to know Prog. Give me some short interest names. Proginity. It says the short interest of Proginity is 12.13%. I don't know. Give me some names here, folks. Tesla, 3.29%. What's another one? AMC. Ooh, Levi Strauss beats estimates. I didn't know they were reporting today. 18.51% on AMC. It's going up again. ATER. Oh my gosh. ATER is at 27.3% short. FUV. 32.21%. Wow. Owlet. Yeah, let's see how short it is. Owlet's like not short at all. It doesn't show up, which is weird because we know the short sellers are in it, unless they already dumped. A firm, I don't think has much short. Firm 7.21% short. That's actually gone up a little bit over the last bit. Oh, that's interesting. Emrin? Oh my gosh, why? 9.19%. Body. 7.73. LCID. 8.42. URNM. Was that uranium something? 1.32. Palantir. Palantir 3.56. Hippo's like super low on the shorts as well. It's so great. 1.7%. Charge point 8.99. It's been declining. BBIG I don't think is going to actually let me. Shift Technology has been declining at 18.47 now. Hey, okay. I'm going to do like one or two more. HITI doesn't come up. TTCF 29.87%. Wow. SoFi. HITI doesn't come up unless I'm reading that wrong. It's not two eyes. 4.42% on a firm. GREE. 40.92%. mRNA. The last one. mRNA. mRNA 4.05%. Okay. I gotta go, folks. Thank you very much for being here. It was a blast as usual, and we will see you all in the next one.